The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, March 28th show. I am your host and mortgage expert, Tina Mitchell. I am committed to providing you knowledge needed to be successful in every area regarding your finances. Knowledge is power, and that's the reason that I'm here and what the show is all about. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but I'm here to answer any questions or connect you with the guests that I have in studio. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. Always feel free to go to the site for any resource regarding finances. You can probably type in the search for any topic regarding money, finances, and find those guests in studio. But I'm excited for my lineup today. The show is all about your financial life. We're going to discuss financial planning, life, long-term, and disability insurance and estate planning, all essential parts of your financial life plan. And unlike my normal shows where I do individual interviews, I'm actually going to have more of a panel format. So we're going to be talking with Brad VanVechten with Private Wealth Solutions, Kelsey Blackham, Vice President of Duncan and Haling, and Glenn Price with Price and Farrington, attorneys and counselors at law. Great information and great guests in studio. For more information on any of the topics, again, call into the show, 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And if you're thinking about purchasing a house, I think it's really important to have a little bit of a checklist. So I want to talk about that during our Money Chat.
Money.
I think anything we do when it comes to purchasing, we should probably be prepared. So there's a lot of buyers out there trying to purchase homes right now, and having a checklist, I think, is really important. Understanding what your needs and what your wants are. There's needs and there's what I call a wish list. Really breaking those down and what's important to you, especially in this market, because it's definitely a seller's market. There is not a lot of inventory out on the market. Actually, it's the lowest inventory that we've seen in our history. So it's really challenging for you as a buyer. But I will tell you, if you want to purchase a house, you're going to find one. You just got to stick with it and not give up. And you've got to get really realistic of what's available out there. And that's why it's important to have a list of what's important to you or what your needs are, as well as what those wish items would be. So when you get out there and you can make a decision on whether that property is going to fit well for you. But also you want to have in that checklist and prepare, what are you trying to target as far as price? As important, what are you trying, and even more important, what are you trying to target as far as your payment objective? So get an understanding of where you're comfortable at in the neighborhood and the areas that you want to live with your family. Where is that target price range and what's that going to take? And then comparing that or bringing in your payment objective and what you're willing to pay on a monthly payment. Now, sometimes those numbers will match up, sometimes they won't. If they don't match up, you've got to go back to the drawing board before you start getting out in the market and shopping for a home and decide what you're willing to make an adjustment to. You're either making an adjustment to your target price, which means you're making an adjustment in the area in the home that you want to live, or you're going to have to go back to your budgeting and find out where you can adjust some of your finances to increase that payment objective. Now, what most consumers don't know is the per 10,000 calculation. This is really important. It's simple math and something important for you to have, because I bet if you're listening right now, you may not realize that every $10,000 in a purchase price is a difference of maybe $45, $55 a month in your payment. That's principal, interest, taxes, and insurance, your entire mortgage payment. If you're looking at a 20% down payment, it's running about $45 per $10,000, and a 5% down payment, about $55 per $10,000. If you're looking at a zero down loan, add another $5, it's running about $60 per $10,000. So what that means, if you're looking at a home that needs to be in a price range of $500,000, and that doesn't meet your payment objective, you need to go back and figure out how you can adjust your budgeting, maybe $50, $60 a month to get another $10,000 in price. Not that big of a difference. And if you just look at some of the things that a lot of us do here in Seattle, let's just use coffee for an example. If you buy a cup of coffee on your way to work at Starbucks, run through the drive-thru, just 5 days a week, that's about $80 a month. So just by eliminating that Starbucks coffee, that's going to give you over $10,000 in purchase price. So get realistic on what you need in target price and payment objective and match those together. Property taxes are important to understand in the neighborhood that you're purchasing and what those taxes are averaging. Normally in this market, they're anywhere from 1 to 1.2%, but a lot of consumers don't realize that property taxes are only 40 to 50% of it is based on the actual assessed value of the home. The remaining portion of your taxes is based on the levies that you're voting for. So if you're living in a better school district, if you've got more parks and things in your neighborhood, you're going to be paying higher property taxes. So as for homeowners out there, make sure that you're paying attention to the levies and things that you're voting for, because again, it does affect sometimes 50% or more of your actual property taxes. Transportation, if that's important to you, to find out in a commute and where you're working at and how long it's going to take to get you from your home to your work. Now, a lot of time, especially in this market to where, again, it's a seller's market, which means there's not a lot of inventory out there for buyers. Sometimes you guys are getting excited on the homes that you're seeing and you just want to get into the market. You want to be really careful when it comes to commute. Make sure that you're taking some time before you start getting out and looking at homes in the area that you want to be and drive that commute. If you've got to get into a further area to get more home, drive that commute during the commute hours. So take some time not to drive from your potential home that you're going to live into your work on the weekends or after business hours. Do it when you're actually going to be commuting to work and see how that commute really feels for you before you get into that home. Also, if transportation is important for you on transit, understanding or seeing where that's available in your neighborhood and looking at that before getting into too much of the home search itself. Neighborhood character is important. Take a look at the neighbors. Maybe take a knock on some doors and get some feedback of what that neighborhood has to offer and the culture for it. Also finding out where the homes and how the homes look on the outside and on the outside, and the yards is important as well. So take a look at that. Are you living on a busy street or a quiet street? Is it important for you to get sun? A lot of times you don't realize in North Bend is a beautiful area to live with Mount Si, but they don't get a lot of sun. So you got to consider that if you're moving out into areas, just understanding what's important to you. Education, that's obvious. Your school district and whether that's going to fit the needs of your family and your kids. Walk score is important. If it's important to you to have shopping near you or restaurants, so getting an idea of what that has to offer as far as walk score and if that's important to you. Health facilities, recreation facilities, entertainment, religion, all of these things are what you want to think about and have on your checklist, again, if they're important to you. So most important is to make out your list, find out where your needs or your wants. Your needs are what I call a wish list, and see where you're willing to sacrifice if need be to get into the home that you want and home ownership. Again, any questions, feel free to call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. Coming up next on the Money Hour, discussion about your financial life, financial planning, lifelong term and disability and insurance, and estate planning. All essential parts of your financing and your life plan for financing. Right here at 1150 AM KKNW after the short break.
This is the story of Daniel, who was born 2 months early. He weighed 1 pound, 7 ounces. His lungs weren't ready. His heart wasn't ready. His brain wasn't ready. At the hospital, the nurses said Daniel was a fighter, and they would do all they could to help him. The doctor said even with the best care, Daniel may never walk. He may never see. He may never learn. Daniel's parents spent night after night at the hospital, watching his every breath, holding his tiny hands, and looking for signs that he was growing stronger. At home, his parents looked around Daniel's empty nursery, at the quiet toys and the still rocker, and they hoped that one day they could sit in that rocking chair and tell this story to their very healthy son. Daniel's is just one of the more than 500,000 stories of babies born prematurely last year, but there's hope for a happy ending. The March of Dimes is funding the research and programs to stop premature birth. You can help bring more babies home healthy. Learn how at marchofdimes.com. Working together for stronger, healthier babies.
Ranger Station, Ranger speaking.
Hi. I'd like to report a bear hug.
Okay.
Well, before I left my campsite, I was putting out my fire, and out of nowhere, Smokey Bear showed up and hugged me?
So you drowned the fire, you stirred it, drowned it again, and felt that it was cold?
Uh-huh.
Oh, yeah. He likes it when people correctly put out their campfires. He's pretty big on wildfire prevention. He's just letting you know you did good with a hug. He's a hugger.
I just got a bear hug from Smokey Bear. Status update!
All right, I'm going to let you go now. I've got a lot of ranger stuff to do. There are many ways to start a fire, but one sure way to put it out. Learn how you can do your part at SmokeyBear.com.
Only you can prevent wildfires.
Sponsored by the U.S. Forest Service, Ad Council, and your state forester.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, March 28th show. I provide you news on everything regarding your money, fresh information on market trends and conditions in our local economy. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can always call into the show at 1-855-400-1150 or online at themoneyhour.com with any questions, or if you want me to connect you with any of the guests that I have in studio today. And in studio right now, I have Brad VanVechten with Private Wealth Management Solutions, also Kelsey Blackham, Vice President of Duncan and Haley, and Glenn Price with Price and Farrington, attorneys and counselors at law. Today is really going to be a panel discussion, just talking about all of these three areas: financial planning, estate planning, and insurance. I think are key components to our wealth management team and people that we need. And I thought it'd be fun to talk with the three of them together because they are a power partner group. They do business together, take care of their clients all in this arena. So thanks you guys for joining me in studio.
Our pleasure.
Yes, absolutely.
Glenn?
Thank you.
And just a little bit about, let's start out with Brad. Bradley is independent, fee-only, and certified financial planner. He's been helping individual families and small business owners identify and achieve their financial goals for 20 years. He works with you personally to understand your needs, map out cohesive strategies, and provide ongoing guidance to help you succeed as an investor. His professional credentials include certified financial planner, certified investment management analyst, chartered life underwriter, and chartered financial consultant. Brad is founder of Private Wealth Management Solutions based in Bellevue, Washington, right down the street from my office, and state registered investment advisor. Brad, thank you again for joining me.
Happy to be here.
Background on Kelsey. Kelsey is the vice president of Duncan and Haley Ltd. and is the lead advisor of their insurance division in Seattle. Kelsey was born in Port Angeles, Washington, and earned her bachelor's degree at University of Washington in business administration. Carries life, health, disability, and long-term care insurance licenses and holds the certified long-term care designation. Thank you, Kelsey, also again for coming into studio.
Yeah, thank you.
And last in studio, but definitely not least, Glenn Price and Farrington, PLLC attorneys and counselors at law. Graduated from Harvard, the London School of Economics, and Duke Law School, 39 years in legal practice. Named a super lawyer by Washington Law. Politics Magazine named a top estate planning attorney in 2013 Seattle Magazine. Glenn has spoken throughout Washington in public and private estate planning events over the past 20 years. Works closely with other professional advisors in serving clients' needs in estate, tax, retirement, asset protection, and family wealth planning. Glenn, thank you for joining me.
Thank you.
And I want to just go ahead and start out. I'm going to start out with, we're on the financial side, really talking about a comprehensive financial plan. And Brad, I've had you in studio before, and I'm excited that you're able to come back and also introduce me to part of your power partner team. Let's start out with, what is a comprehensive financial plan? plan or planning?
Yeah, so that's where you'd engage the services of a certified financial planner to evaluate a specific part or perhaps the entire picture of a person or family's current financial situation with an eye toward what to do going forward to give you the best chance of achieving your goals. So that can include education or college planning, and not even college anymore. There's some of these high schools are pricey. Right? Retirement planning, evaluation of your cash flow to see if you can afford all these things. Taxation strategies, estate planning, including wills and powers of attorney. Insurance coverages, mortgage strategies, that's where you come in. Investment strategies, and then business continuation or exit strategies if you happen to be a small business owner. And what we do is we run that information, ask you a number of questions, get a sense of where you are, where you want to be. We run it through some software to see what things might look like 10, 20, or 30 years down the line, given certain assumptions. For instance, rates of return on real estate, your investments, rates of inflation, things like that. And so then I would provide you with a cohesive strategy or a roadmap that integrates all your goals. And that's when I bring in specialists such as Kelsey and Glenn.
So let's go ahead and talk. Kelsey, Brad just mentioned in bringing you in your expertise. It's really putting together the package that you need for your insurance. That's life insurance, disability, and long-term insurance. Why is it important to have life insurance?
There's a lot of reasons to have life insurance. Kind of first and foremost is just looking at basic family protection. That's a primary consideration for folks. Kind of the bottom line there is that if you have dependents that rely on you and your ongoing income and you don't have the savings otherwise to support that if you were gone, then you are definitely a candidate for some life insurance. Other things that you might consider life insurance for would be things like funding a child's education, or as Glenn might talking about your estate taxes and possible funding for that with life insurance, typically held in trust. So lots of reason to consider life insurance, primarily family protection. So
Kelsey, what about the coverage that you need? So how do you decide on that?
Yeah. So as far as determining an appropriate amount of coverage, this is really where you need a financial planner. There's so many factors that come into play in determining an appropriate amount of life insurance. You'll want to take into consideration everything from your income level, what your annual spending rate is, other assets that you have, debts that you have, including your mortgage, and then, of course, whether or not your spouse contributes to the household income. So basically, your overall financial position is really going to determine what's an appropriate amount of coverage and how it should be structured. So that's where a good financial planner can be really helpful.
So, Brad, let's go back to you then on financial planning, because Kelsey kind of, put it in your arena. And this is really, the show's about your financial plan in all areas and really partnering up and being able to, we can only be an expert at one thing. My expert is doing mortgages, and that's what I do. But there's a whole round of people that are needed. So how do you are helping in the life insurance policy or the life insurance and in the financial plan and being able to help them plan for that?
So we do an assessment of, as Kelsey said, exactly what's needed. And in the event that the principal breadwinner wasn't around, as an example, how would you pay off the mortgage? How would you pay college education costs and things like that? And then you have to factor in how much life insurance you can afford and what's the best type of life insurance, because there are a number of types of insurance that Kelsey will go over with us in a second. So that's where the cash flow analysis comes in as well.
Okay.
So you could have a need for $1 million, but not be able to afford $1 million.
Sure.
And that's, the give and take.
So you're going to help them decide what they have, where they can strategize and place that money to maximize the opportunity, and then let them know what they have to work with and send them back to Kelsey.
Correct.
So Kelsey, let's talk a little bit more about the coverage. What about coverage at work? Do you need a supplement to that? If they already have coverage at work, what do you advise there?
Yeah, so a lot of employers will provide some type of life insurance. It's usually pretty basic. It might be just only $10,000 to cover your final expenses, or it might be 1 or 2 times your income on average. Either way, once you determine with your financial planner or your investment professional, what the appropriate amount of insurance is, you can kind of back off what your employer provides and then usually have to supplement that with a private policy. It's actually pretty interesting comparison to run that voluntary coverage for life insurance, at least with your company, is pretty expensive. And so if you're in good health, going and buying that type of coverage on your own as an individual can actually be a lot more cost effective. So that's an exercise worth running.
Exactly. Now, Glenn, let's go ahead and go down to you and talk about the estate planning, because that's another really important piece. And I think that's actually a piece that people kind of put on their back burner for some reason. And I think it's because we're getting it well, and actually sometimes even on the life insurance side of it. But what can you break down what estate planning is, Glenn, for my listeners?
Sure. The folks who come in to see me are attempting to control their assets while they're alive. They want to take care of themselves and their family if they become disabled or incapacitated. And during their lives and following their death, their goal is to leave what they have to who they want, the way they want, when they want, as privately as possible, with the least possible costs, fees, and taxes. Mm-hmm. And that really is, bottom line, what estate planning in general is all about.
And Glenn, when should they start the estate planning? I mean, when should they do this?
Yesterday.
I knew the answer, but I just needed to have you say that to my listeners.
A procrastinator's work is never done, and we find procrastination truly is a big problem. Folks are misled into believing that estate planning is just about death and dying, and therefore it's about death planning. Well, that means that 20-year-olds aren't going to do estate planning because they're not going to die. Yep. 30-year-olds are too busy, so they don't do it. Yep. 40-year-olds are in denial, so they don't get around to doing it because they're thinking of it as death planning. Uh-huh. We find that when folks hit 50, it takes them anywhere from about 2 weeks to 25 years to get around to doing their estate planning.
Yes. Oh my gosh, that is such a scary thought. And I know the answer to this, Glenn, but I want from the expert to share with my listeners who needs estate planning.
Really everyone, because another myth and misconception is that estate planning is just for the wealthy, just for the rich.
Yes.
Because estate planning involves protecting yourself and your family during your life if you're out of commission, if you're laid up, if you're ill or injured. It doesn't matter how old you are or what kind of wealth you have. It's the kind of planning that everyone needs to have in place on some level or other.
Exactly. I so much agree. And then let's try, what about Brad, financial planning? On the financial side, who needs financial planning? When should somebody pick up the phone and give you a call?
So if you're just starting out a family, as an example, I think it'd be a great time to put some sort of a roadmap in place. Planning for college education, even retirement, things like that. So, the answer is the sooner the better. You can put some sort of roadmap in place, particularly if you're young and just starting a family. Now, that being said, if you're 50 years old and thinking about retirement, you want to get some sense of when that's going to be feasible, then do it then. At least come in and have a retirement plan done to give you some idea what things might look like and when you might be able to retire.
Yeah, and I think every, the Money Hour is about all of our, everything regarding financing, and I think it's the same anywhere. If you want to think about buying a home, you talk to a mortgage professional right away, and that's going to determine whether you can or cannot buy a home and being able to strategize. If you're not sure about financial planning, that means you need to pick up the phone and you need to talk about financial planning and get an idea of where you're at and strategize on whether it's how your plan's going to move forward. Kelsey, I'd like to get back to life insurance because there's a lot of different life insurance policies out there, and how do you counsel and help your clients decide? I mean, what types are available?
Right. Again, your financial plan will really drive what's appropriate for you, but in general, there's two types of coverage. If you boil it down, there's term insurance and there's permanent life insurance. Term insurance is generally coverage for just a stated period of time, like 10 or 20 years, and it works a lot like your home or auto coverage, where if your house doesn't burn down, you don't get anything back. There's no investment component, no cash value. It's just straight, pure insurance. Permanent insurance, on the other hand, is things like universal life or whole life, and those are generally lifetime type policies. They're usually guaranteed to pay out at some date, not just if you die in the next 10 or 20 years. And a lot of them also carry a cash value or an investment component where you can access that cash value at a later date, and it typically grows tax deferred over time.
And that is a really key one in consulting and finding out that fits in your financial plan when talking with Brad, correct?
Absolutely.
Yeah, there's some really great, and I think any product out there is really great products for the right person. So it's just understanding what those products are and where they fit into your overall plan.
Absolutely.
So don't go away. Coming up next, I'm right here with the panel. It's going to be the entire show. And today's show is about your financial life, how important it is. What do you need to do? How do you prepare? And who do you need to talk with? Well, I've got them all in studio here. Brad VanVechten with Private Wealth Management Solutions, Kelsey Blackham, Vice President of Duncan and Haley, Glenn Price with Price and Farrington, attorneys and counselors at law, right here on 1150 AM KKNW after the short break.
The thought of my sons growing up without me inspired me to quit smoking.
I talked to my doctors, and then I threw away all my cigarettes, ashtrays, and lighters.
I started exercising instead of smoking.
Getting support from friends online kept me on track.
Staying away from alcohol when I was first quitting was key.
Instead of smoking after I ate, I'd get up and take a walk.
I missed having a cigarette in my hand, so I'd hold a pen or a straw, anything.
Until I knew I wouldn't give in to temptation, I spent more time with my friends who didn't smoke.
I went to places that were smoke-free.
I didn't stay quit the very first time I tried.
I kept on trying, and I learned something each time.
Do whatever it takes.
No matter how many times it takes.
I quit.
I quit.
I quit.
We did it, so can you.
You can quit. For free help, call 1-800-QUIT-NOW. A message from the U.S. Department of Health and Human Services and CDC.
More than 1 million wild animals are killed each year illegally. Poaching is a major threat to our country's wildlife. I'm Tom Barry. I'm an actor with a desire to preserve living space for wildlife. The Humane Society Wildlife Land Trust does just that. Works with private landowners to protect wildlife, to preserve natural habitats. To learn more or to work with the Humane Society Wildlife Land Trust, call 800-729-SAVE. That's 800-729-SAVE, or visit wildlifelandtrust.org. Thank you.
Today might be the day I drop out of school. Today could be the last day I try. My parents alone can't stop me. My friends can't even stop me. But you might be able to. With United Way, you could tutor me, be my mentor, or volunteer to just read with me. If someone had helped me earlier, I might not be struggling. And studies prove that kids who read well by 3rd grade are more likely to graduate. There are tons of ways people like you can help kids like me stay in school. And United Way is calling for you to be one of them. Because it takes 12 years to create a graduate. It takes about the same time to create a dropout. And the difference between me becoming one or the other could be you. Make me a success, not a statistic.
Take the pledge to volunteer now at unitedway.org. Brought to you by United Way and the Ad Council.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, March 28th show. It's a great time to talk about money, and that's why I'm here. And the purpose of my show, how to make money, save money, and build a better quality of life for you and your family. If you're hearing my show at a different time or day, you're listening to a rebroadcast, to talk to with myself or any of the guests that I have in the studio, you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150. Today's show, or kind of a panel discussion, we're talking about your financial planning, your insurance planning, and your estate planning. Thanks, you guys, again. I've got Brad, Kelsey, and Glenn here. Thanks, you guys, for sticking around for the entire show.
Happy to.
Thank you.
So, Glenn, let's go ahead and start out the beginning of this segment on the estate planning arena, talking about triggers or events that would trigger a reason why you want to start the estate planning, or even, to relook at the estate planning again. What are those life triggers that people need to be aware of?
You know, the initial life trigger is when folks become of majority age, 18 years of age and older, they really want to put together some kind of estate planning. It might vary in its complexity or detail, but that's the starting point. As folks move through their lives, the kinds of things that can impact their estate planning and cause them to perhaps want to revisit decisions they made earlier are marriages, divorces, births, a change in health, a dramatic change in wealth, upwards or downwards. Changes in the law, certainly, tax-wise and otherwise, can cause people to reevaluate. changes in beneficiaries, needs, abilities, all kinds of factors.
And if there is no changes, should they still be kind of looking at it on an annual basis, Glenn, or how do you counsel your clients there?
Well, you always want to be mindful of the planning you have in place so that if some life event has occurred or your goals or circumstances have changed, you can go back and reevaluate that planning.
And I'd like to ask all of you this, starting out with Brad in representing the financial planning arena. There's a lot of online resources. There's a lot of online tools, especially in dealing with numbers that you can use. What's the downfall and disadvantage if somebody thinks they can just kind of, do this plan for their finances all on their own?
You're exactly right, by the way. I hadn't thought about that all three of our disciplines you can pretty much get very low cost online. So I can only tell you this. You're doing something online. You're not getting, you're not speaking with somebody that's got 20 years of experience behind them. An online financial planning software doesn't know what questions to even ask, aside from, the hard facts. And most importantly, online software is not going to talk you in off the ledge in an event like 2008 or 2000. So I think that's just scratching the surface in terms of what sort of value finding a qualified certified financial planner to work with is going to benefit you.
Makes total sense. Glenn, and for you, I mean, in the estate planning, there's all these online things that you can go in and what would be your answer to that?
Well, you can always build an airplane from a kit, but would you want to fly in it?
Love it.
The problem is off-the-shelf, cheap, boilerplate, fill-in-the-blank plans are inadequate. In the end, attorneys find that it provides more business and higher fees because folks didn't plan proactively. So greater cost complications and confusion down the road are going to result from El Cheapo type planning.
And the last thing that you want to do is do El Cheapo when it comes to anything regarding your financings, because a small financial mistake can turn into a huge financial mistake, not only for you, but for your loved ones as well. Kelsey, I want to go ahead and switch back over to the insurance side and talk a little bit about disability insurance. Do most most employers provide disability insurance for their employees?
Yeah, absolutely. For those who don't know, disability insurance is basically like paycheck insurance. If you're ever able to not work due to an illness or injury, then that's really where disability insurance comes in and starts to replace a portion of your income. A lot of employers do provide that coverage. At work, you'll find usually pretty limited benefits if there is a benefit, so worth checking your benefits book. A lot of benefits will provide about a 60% benefit, and that's usually income taxable to a lot of employees, and that's something that people don't realize. So kind of the age-old question there is, could you afford to live off of half your paycheck?
Exactly.
And if the answer is no, then you're probably not getting enough out of your group coverage.
So then they would need to have supplemental coverage where you could assist and help out with that.
That's right. The other thing to look at, too, is if you have any commissions or bonuses or other types of income like K-1 income, a lot of those forms of income aren't commonly covered under group insurance policies. So worth looking at individual supplemental policies and just making sure that you're adequately covered.
Makes total sense. And I know a lot of people, it's in this arena, especially with disability, it's like, you know what, this is not going to happen to me. What are the odds that something's going to happen that I need disability insurance? And how would you answer that?
Yeah, that's a great question. There's a lot of different surveys out there. I think a good one that's pretty recent is from a 2010 Consumer Disability Awareness Survey that basically states about 30% of people today that are entering the workforce, so people in their 20s and 30s, will experience a disability sometime prior to the time they're retired.
Are you serious?
30%.
That is a huge percent.
And it's interesting because it's so much more likely than dying during your working years. And yet more people will have life insurance than they do disability coverage.
Wow,
so it's really an under-addressed need.
So if you, and I've got to ask this, I mean, if you've got somebody that comes in because of the ability to be able to financially do everything can be challenging. So are you helping after they talk with Brad and get their financial plan together to make sure that they're maximizing their extra cash flow based on how they're investing their money, and then he sends them over to you to get dialed in on their insurance? Or is it more important to have a little bit of everything, and we're talking life insurance, disability, and long-term insurance, have a little bit of everything to make sure that you're covered in all areas? Or is it better to focus on one? I mean, how do you strategize with that with someone that doesn't have the money to do everything.
Right. Yeah, I think it becomes an order of priorities. At first, you're going to look at what's the biggest need, what are the biggest risks to you and your financial plan succeeding over time.
Sure.
And if that is just an ultimate death situation, then of course life insurance is going to be important. But for most people, the odds of disability, the odds of death are all present for everybody. So having at least a sufficient amount of coverage in each of those areas is important.
Makes total sense. So on the disability, when should a listener buy it? Is when they start their employment, and do they ever get to cancel it?
Right. Yeah. So
is this for an everything?
That's a great question. Yeah. So as a general rule, you want to get disability insurance around the time you start your professional career.
Okay.
The premiums on disability insurance are based on the age at the time you buy it. So the younger you buy, the lower the premium that you're locking in over your lifetime or during your working time. So the younger, the better. The other thing that's worth noting is that health insurance or your health status is actually a really big factor in determining what rate you pay. So you kind of joke you're never getting younger or healthier than you are today, basically.
Exactly.
So that's worth noting. And of course, disabilities can occur at any age. It's not something that you just think will happen in your 50s or 60s. Anybody can kind of get hit by the bus at any day.
Exactly. So making sure that you have that coverage. And it's not just coverage in protecting you, but it's protecting your spouse, it's protecting your children. And so it's really important when we talk about insurance. So Brad, let's get back to the financial planning arena. And we already talked about the online stuff and really being able to kind of do stuff on your own, which is a really, really bad decision. You really need to have an expert and a local expert that you're building a long-term relationship. But let's also talk about that expert and who they're choosing. Why would it be important to work with an independent certified financial planner, Brad?
Great question. I think the preference should be because a CFP gives you unbiased advice.
Okay.
So if you're dealing with a CFP or a financial advisor, or they call themselves financial planner, and by the way, a lot of people are doing that these days that work for insurance companies, as an example, because they're deliberately trying to confuse the public.
Okay.
And unfortunately they're succeeding. So that's why I think it's beneficial to work with a certified financial planner, particularly an independent one who doesn't have any bias towards guiding you toward a given solution that might generate a commission for that individual.
So, Brad, if I have a listener that wants to take that first step to get a plan put together, or maybe they have a plan but they're not really sure and they don't have a relationship with their advisor, or they've lost connection, or they've lost confidence, or whatever that case may be, what does it cost to have a financial plan done?
That's a great question.
Start over or start?
Yeah. So, right, you can always have somebody evaluate a plan that's currently in place, or to start over. So the answer is I charge $200 an hour to do a plan. However, it doesn't have to be a comprehensive financial plan. So as an individual comes to me and just wants retirement planning as an example, or education planning, that's going to take a lot less time, and as a consequence cost a lot less. But by the way, getting back to what Kelsey was saying, if you start saving for your child's college education when he's 1 or 2 years old, that's going to be a lot less of a financial hindrance than if you start that at 15 years of age.
Of course.
Right? So I think, the sooner you get these sorts of roadmaps in place, the better for you and your family.
Totally agree. Glenn, estate planning. There are a lot of myths out there when it comes to estate planning. Can you share some of those with my listeners?
There are all kinds of myths and misconceptions. Just kind of running through them quickly. A common myth, estate planning is just for the rich. Another myth, I don't need a will. Another myth, I don't really need to get counseling on a will. I'll just go buy a form. That'll be adequate.
Yep.
My living trust will automatically avoid probate. That's a myth a lot of people have succumbed to. They don't realize they've got to get the assets they own inside their trust in order for it to avoid probate.
Okay.
Another myth about living trusts is that they avoid, that they're asset protection vehicles, that they protect you from creditors and lawsuits. That's not the purpose of a living trust. And finally, a very common myth is, I've kept things simple by naming my estate as my beneficiary.
Okay.
There are all kinds of adverse legal consequences that can flow from that.
So again, it's just important to sit down and talk with an expert, talk about an expert in your own personal financial situation when it comes to preparing for your financial planning, when it comes to how you're going to insure yourself and make sure your family's protected, and how you're going to make sure that you're protecting your estate and protecting your family member in case of death, which it's not in case of death, it's when the death happens. And so make sure that you're protected there. And Glenn, what about who's the estate planning for? Who benefits from the estate plan? Can you break that down?
Well, hopefully the client benefits, the client's spouse benefits, children or any dependents. Certainly the client's financial well-being benefits, because a part of estate planning is to position assets that have been well insured or well invested in a way that they will provide maximum benefit to the family, the client. Many people benefit.
Makes total sense. I think that's a good place to take us to commercial, but we're going to come right back here next on the Money Hour. Comprehensive financial planning, insurance coverage related to your financial plan, and weaving in your estate plan to tie it all together. Stay tuned so that you can learn how to financially prepare right here at 1150 AM KKNW after the short break.
Every day, more than 1.4 million American lives are disrupted by Crohn's disease or ulcerative colitis. This year alone, 70,000 new cases will be diagnosed, and more of those are children. Nearly 75% of patients with Crohn's disease will require one or more surgeries at some point in their lives. Those are the facts, but they don't speak to the daily realities of living with Crohn's or colitis. Excruciating pain, a lifetime of medication, and days when they can't even get out of bed. There's a good chance you know someone suffering with Crohn's or colitis. Someone like me. I'm Amy Brenneman, and I'm asking you to support the Crohn's and Colitis Foundation of America. CCFA was created to help millions of us cope and to find cures. Visit ccfa.org today to learn more, donate, or join an event. It's time to face the facts and reach out to help someone you know at ccfa.org.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, March 28th show, bringing in expert advice and inside knowledge on today's events in our local economy and how it will affect your money. If you're listening to my show at a different time or day, you're listening to a rebroadcast of my show, you can always call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to talk with my guest, set up time to plan with my guest, or ask him any questions that you may have. And in studio, my guests are Brad VanVechten with Private Wealth Management Solutions, Kelsey Blackham, Vice President of Duncan and Healy, and Glenn Price with Price and Farrington, attorneys and counselors at law when it comes to your estate planning. So let's go ahead and start out. We were talking with you, Glenn, before I took us to break about estate planning, and estate planning, people think it's about planning for death, but also it's planning for people and what they can do for you during your life if something happens to you and you can't take care of yourself, correct?
That's exactly right. The death time planning document is the will, but there are 4 critically important lifetime estate planning documents everyone should have of every age.
What are those?
First is a financial power of attorney to make sure that you've authorized someone you trust to step into your shoes, pay your bills, manage your investments, make financial decisions for you during any period of time during your life you're out of commission. The healthcare power of attorney, the same idea, but now you're relying on someone close to you who you trust implicitly to make medical or healthcare decisions for you if for some reason you're not able to make them for yourself. Thirdly is the living will, also known as the advance directive to physicians, which is the legal document that addresses the issue of what are my wishes if I am on life support. And fourth is the all-important privacy authorization under the HIPAA privacy laws, which limits access to your private confidential healthcare information only to those family members or other individuals close to you who you wish to have access to it.
And if you talk about the health care power of attorney, I mean, we can talk to somebody that's not use an example of someone that's not expecting to have something happen. But what if a child's in college and they become in a position to where they can't take care of themselves and they don't have a power of attorney set up for their parents to make decisions for them? I mean, that could be a nightmare, Glenn, right?
It is a critically important problem. In fact, my 20-year-old daughter 2 years ago had her mother and dad put powers of attorney in front of her and a HIPAA authorization in front of her to sign. most parents don't understand that even though they're paying $50,000 a year tuition for their college student, if that student ends up in the infirmary and the parent calls in to get information from the doctors, nurses regarding what's going on, the parents don't have a legal right to that adult child, that is 18 or older, private confidential health care information without the child having signed off.
Pretty scary position to be in, and especially these things happen when the disaster happens and you're not prepared. Just imagine how big of a disaster that would be when you're not prepared, because it's kind of hard to go backwards in that chaos and what's happening during that time.
Exactly.
Brad, let's talk about on the financial planning side when it comes time, because a lot of times I think people are going to come see you first in preparing for their finances and what they need to be doing to put that plan together. When are you bringing in your power partners like Kelsey on the insurance side and like Glenn on the estate planning side?
So it's generally after I deliver the financial plan.
Okay.
I ask them during the interview process if they're currently working with a trusted advisor, like an estate planning attorney or a CPA, mortgage broker, any of those types of people. And if they are currently involved with somebody that they like and trust, fine, we'll use them. However, if they don't, or they're somewhat skeptical about qualifications of that individual, that's when I bring in experts like yourself or Kelsey or Glenn.
Makes sense. And Brad, I know the benefit of having a financial plan, but I'd like you to share with my listeners the disadvantage of not having a financial plan.
Now, you're left to your own whims and emotions generally if you don't have a plan. So I think the best thing, frankly, about having a financial plan, a written comprehensive financial plan in place, is that it gives you a roadmap, number one. And then yearly you go back and revisit it. Are we on track? Have the investments performed the way we thought? Was there a catastrophic event during the year?
Yes.
Any of those things are dramatically going to affect the plan. Was there a birth? Was there a death? Was there a marriage, divorce? Any of those types of things. Revisit the plan, modify it, and then move forward and revisit it again.
Yes. And so, Brad, they're sitting down and they're talking with you and getting their finances together. And coming over to Kelsey, I want to talk about long-term care insurance, because I've dealt with my dad that did not have long-term care insurance, which I feel bad as the eldest child, not making sure that he was taken care of in that area. And so I learned a lot of lessons, which won't happen the second time around when my mom goes through this. But my mother-in-law, now we're dealing with my husband's mother, and she does have long-term care insurance, and she's got disability. I mean, she is like totally taken care of, and there's so many things that are just kind of creeping up right now, and there's no sense of stress. I think there's sense of stress for the people that are there, because they're getting through those different times and changes that are happening in their life, which can add stress. But it takes a lot of that away, being prepared. Now, long-term care insurance, I think this is one, because it can be spendy, can't it, Kelsey?
It can. A lot of people, that is something that people assume in looking at long-term care, is it's probably going to be too expensive for them.
Yes.
But it's generally affordable if you look at it early enough and you're young and healthy enough to qualify.
That's what I wanted to hear you say.
Waiting until you already need care is usually not a good idea. If you already have a disability or something going on, it's going to be tough to get coverage. So what you're looking for is to buy it at a time that you are still young and healthy enough to lock in a premium that you're expecting to pay kind of for the rest of your life. That's affordable. And
so talk about the benefits of long-term care. What is that covering? Of course, Brad.
What age would that be? 50, 55?
Right. No, that's a great question. So most of the people that are buying long-term care insurance are in their 50s or early 60s. That just tends to be a very common time as you approach retirement.
Which is not the best time.
It's not necessarily the best time. Looking at it in your 40s or even early 50s would be really preferable, at least starting to take a look at it so you know what the cost is and know that cost is going to go up each and every year you wait to kind of pull the trigger on that.
So, Kelsey, and I know there's a lot of different factors in that, but if somebody is starting their long-term care at 40, what kind of cost could they be looking at? What's an average?
Yeah, an average premium for just an individual can range anywhere from maybe $2,000 a year to $5,000 a year. I think that's at least a good ballpark to start from.
Yeah.
There's a lot of different factors in designing a policy like that. So the maximum payout levels and whether it's going to have inflation protection, what types of care it's going to cover, those are all factors to consider. And of course, there are some really interesting policies in the market right now, like shared care policies, where a husband and wife can buy one policy together and kind of share the risk and share the premium. Since you don't really know who's going to need this care, when, and for how long, there's some really nice ways to kind of bridge that gap without spending too much money.
Yeah, but there are statistics that there's a good chance that one of them definitely is going to need this.
Absolutely.
This care. Yep. Let's talk about, a lot of people may say, well, there's Medicaid, there's health insurance, why do I have to pay for this myself? I'll deal with that when I get there, and then the government's going to take care of it for me.
Right. So, yeah, that's a common one. I actually have a lot of people call in that tell me they want long-term health insurance. That's actually not a thing. It's long-term care insurance. Or it's your health insurance.
Yeah.
They're very different things.
Totally two different things. Got it.
So your health insurance is generally going to provide acute care that's designed to cure you or recover you in some fashion.
Okay.
Long-term care is really what they call custodial care, meaning it's not intended to cure you. You're probably dealing with old age or senility or kind of a loss of your activities of daily living,
yes.
Eating and bathing and being able to take care of yourself. And those situations generally you don't recover from for the most part. Mm-hmm. And so that's where long-term care provides custodial services. That means home health care aides, assisted living facilities, kind of all the way down to full-blown facility care. So that whole range of things is covered under long-term care policies.
So if you are wanting to take care of your parents, is this something that you can invest and do for them?
Certainly, yeah. You can usually get long-term care policies up until about age 80,
okay.
Notwithstanding good health. So if you're in relatively good health and still under the age of 80, you're definitely still a good candidate for long-term care insurance and worth looking at for your parents, definitely.
Makes sense. Glenn, let's step back over to you and get back into the estate planning arena. Comprehensive estate planning plan. What does that cost?
Oh, I was afraid you were going to ask me
all
that.
this stuff takes money.
I think folks need to beware of someone who quotes a fee without knowing anything about them, who they are, what their circumstances and goals are, what their family situation is. Because a flat fee quoted to everyone totally out of context means something's going to be pulled off a shelf and shoved in front of you the same as it is everyone else. I'm not trying to be coy here.
Sure.
The way we get around this is to invite folks into the office to sit down for a complimentary consultation with us only after we get to know them, what's concerning them, what's motivated them to do estate planning. Are we in a position to really focus in laser-like on them and what they're trying to accomplish? And then quote a range of fees for different kinds of planning options available to them.
Okay. And what about the time to get this put together? So if someone comes into your office, they sit down and have a free consultation to get an idea of where they're at. They're going to get their plan set up. And how long does it take to draw these documents and make sure that they're good, completed, and protected?
Turnaround time is typically 2 or 3, maybe 4 weeks at the most.
Okay.
I think if folks are serious about doing this kind of work and the professional advisor doesn't produce a product for months, there's a disservice being paid the client. So it's a relatively short turnaround.
Okay, just like closing on a mortgage, 3-4 weeks, you'll be in your new home.
By the way, as an aside, Christmas Eve, I was at someone's deathbed getting a trust signed.
Wow.
So it just depends on the circumstance.
Yeah. Yeah, I mean, it's not sad. At least they're getting it done before, but again, it's just adding stress and everything in finances seems easy to procrastinate on it, but it's a big mistake to make. Glenn, I want to ask you one last question here on estate planning. What's the difference? What makes a good estate planner versus an estate planner that somebody does not want to work with? What should be looking at an estate planner and hiring them?
The same thing you should be looking at in a good insurance advisor and independent financial advisor. Someone who is knowledgeable, is willing to listen to you, knows what questions to ask, knows what issues to address with you that you don't necessarily know to go into on your own. That's the value of seeking counseling.
Makes total sense. Brad, on the financial planning, to get a financial plan to put together, we've talked about the estate plan and the time commitment or the process to get that put together. What about getting a good financial plan put together? How long does that take?
It's a great question. Generally, if I can get information back from the clients, statements and so forth, a couple, 2-3 weeks, something like that. What I've learned, though, is if they give me a $500 down payment on the plan, I tend to get information back much more quickly.
Oh, you're too funny, Brad.
Than if there's going to be a payment at the end of the deal. That's right. So if they got a little skin in the game, I tend to get information back soon.
I know how you work. So is there an obligation to have a certified financial planner manage the investments after they get this plan together, or can they make a decision on how they want to move forward?
Absolutely not. So what I do in my financial plan, when I deliver the plan, I give them advice about how their assets should be allocated and so forth. If it's something they wish to have the current advisor or investment advisor do, great. If they want to try and do it themselves at a local discount broker, that's great. They're under no obligation to do it. However, that is part of my business. I charge a fee for assets under management to manage the wealth. And generally what happens after I deliver a plan, the client does come along and has me manage their investments as well.
Yeah, that's awesome. Well, I want to thank each of you for coming in. Brad, for sharing your expertise in the financial planning arena. Kelsey coming in and talking about insurance and the importance of all the different insurances that people need, their health, disability, and long-term care. And Glenn for the estate planning. It was just really fun to have all of you talk on your passion and what you do in your industry and just helping my listeners. So thank you so much.
Our pleasure. Quite welcome.
You guys going to come back?
You bet.
Maybe.
Absolutely.
And if you want to talk to any of my guests, again, pick up the phone, call into the show. The show is wrapping up, but I will directly connect you with any of them. 1-855-400-1150. Again, that's 1-855-400-1150, or online at themoneyhour.com. And if you missed any part of the show today, look for the podcast and stream of the show, and you can listen again. And it was just, a privilege having all of you here. And a shout out to the listeners. Call to action. You need to make sure that you have all these things set up. You have to have a financial plan in place. You've got to make sure you're insured and protected in all the areas that you need, and you have to have a estate plan. So it's really important, and that, again, is what the show is about, is making sure that I help you in your finances to make sure you're protecting yourself and, most importantly, protecting your family. This is your host and mortgage expert, Tina Mitchell, signing off for the day, but I will be back same time, same place next Saturday. Enjoy the rest of your weekend, and I will see you or hear you or be here with you right here on 1150 AM KKNW.
Preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.